Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavesstrategy.com. And today I am going to talk about, there are many times I keep getting a question, how to become an expert trader or how to trade successfully, which methods to use, which methods not to use. There are n number of methods within technical analysis itself and which one to rely on for intraday trades, which one to rely if you are a positional trader or a swing trader, or you want to create a portfolio of stocks consisting of multi-bagger stocks from the long-term perspective. There are a lot of uncertainties that keeps on going in the mind. So I thought I'll address those queries, I'll address those questions, which methods to use, from where to start if you are a fresher, from where to how to improve your accuracy if you are an expert trader already, and what all things you have to evaluate and stuff like that. So the first thing first, there are a lot of myth which is with respect to technical analysis. People believe that it works only on a shorter time frame. Some people believe that technical analysis work only on the longer time frame. Trust me, if markets are fractal in nature. By fractal nature, I mean that whatever you apply on a shorter time frame will work on a bigger time frame across the asset class. Yes, something which is working on a 1 minute or a 3 minutes or a 5 minutes will eventually also work on a bigger time frame on 30 minutes, 15 minutes, hourly chart. You can apply the same methods on 2 hourly chart, daily, weekly, annually. It doesn't make any difference. The patterns you are seeing on an annual chart will be visible even on a 1 minute chart. So that is what the markets are fractal, and the application of the theories, whatever methods you are following, can be done across the space. The next question I get is which indicators to look at when we are looking at technical analysis. There are hundreds of indicators available, and if you start applying those hundreds of indicators, you will be all confused and thoroughly confused, I would say, and you don't know which one to use. So I normally keep it simple in terms of indicators. I apply RSI, ROC, or MACD. Those are working well. You apply one of those, or you can apply all three of those. Most of them are going to give you a similar outcome in terms of indicators. The parameters that you have to select in indicators is varying. I am not going to use the standard parameter, and I have discussed in depth of those parameters in my training, which happened on 2nd and 3rd of March in Master of Technical Analysis, where I explained how to select parameters of those indicators. Apart from that, you can use a bar chart if you are looking at it. And the methods which I normally use and follow is Elliott wave. I then improvised on it by using Neo wave. I combine time cycles along with my wave theory, and that gives me a very clear insight, clear understanding whether the markets are near the topping zone or near the bottoming zone. So time cycles work brilliantly when the markets are coming closer to the time cycle lows, because cycles are synchronized on the lows. That's very important. The other method which I combine is an Ichimoku cloud. Now you might end up seeing that there are a lot of things to apply from, but I would say there are hundreds of possibilities in technical analysis, and you have to pick up the ones that is working for you well. You shouldn't be picking up something that someone has said that you should use, but picking up the ones that you think is working well for you and go in and out of that specific method. You should know everything about that method, how it is constructed, what is the formula, how it looks on a 1 minute chart, how it looks on an annual chart. Once you know in and out of a method, you know for sure how you have to apply it. And if you keep following those rules and keep applying it, you will be able to keep improvising your method. So I have been looking at Ichimoku Cloud for quite some time, and in past also I talked about Ichimoku Cloud. In the last week webinar, prices did move below the cloud, and it then again went up above the cloud. So that's an unfortunate instance during a sideways consolidation where it just gives a false break and moves above. So it's all about probability. Someone messaged that what happened to the market, it should have crashed. It did not. So if the person is smart enough and not a novice and just in the market for the first time, he will understand it's all about probability. There is no certainty in the market. No one can be 100% sure what's going to happen tomorrow. But if you know for sure this is the probabilistic scenario, and 70% of the possibilities the market might be moving in this direction, and 30% is the risk, and that is why you need to have a stop loss in place when 30% is at risk. So Ichimoku cloud, when you combine along with the wave theory and channels, it gives a fantastic and phenomenal result, which I have found. And those results have been phenomenal across if you are doing a positional trade or if you are doing an intraday trade using on a 3 minute chart or if you are using it on a daily chart. It has given amazing outcome. In the current scenario, what I have been observing that because of the steepness of the rise, the internal wave divisions have become little tricky. And because when the internal wave divisions becomes tricky, you need to combine it with trend following methods, and those trend following methods will give you a very clear signal when to go in the direction of the price. So right now, Nifty has been moving from left bottom left corner to the top right corner. If you look at a price chart, when I say bottom left corner to the top right corner, it indicates it's moving on the upside. So far, so good. However, there is some kind of divergence you might be seeing on the indicator, but unless price is confirmed by breaking the support level, you shouldn't avoid going against the trend. So you need to wait for a lower high, lower low formation. Even if you are using an Ichimoku, price moves below the cloud and you see a lower high and a lower low below the cloud, that's an indication that the trend is changing. That's one. It does indicate that there is change in the wave pattern, there is change in the wave structure. So we expected that probably the third is over and the fourth started on the downside when it broke the cloud. Post the fourth is over, now we are seeing a fifth wave on the upside in the form of C wave. So combining that indicator along with wave theory gives an amazing insight where the waves are getting completed and what is the levels that you have to keep a watch on. Based on that, you can derive the trades on positional basis, on a swing basis, or even on an intraday basis. It works fantastically well, trust me on that. So in the training which is upcoming on 6th and 7th of April, I am going to talk about how to combine these methods together in order to derive a high probabilistic trade setup. Also, there have been people, there is a lot of questions which I keep getting is what is the follow-up after the training? So this time we are going to provide a software which is going to do an which will automatically populate the wave counts on the charts and give it to you in fraction of a second. So those software will be made available to the attendees who are attending the training on 6th, 7th April. And that software is going to provide an automated counts of Elliott wave directly on the price chart, directly on stocks, directly on index across the time frame. And if that happens, then it gives you a really strong tool to validate whether your counts that you are doing is on the right direction and what is the software giving. I would still say you will not depend on a machine right now to do an Elliott wave count. You will use it as a confirmation whether you are doing it right or not, and that will give you a lot of confidence. If you see what you are plotting and you are doing the markings is exactly what the software is doing, that gives you a lot of confidence, and that is what I think is going to make a lot of difference. And yeah, I'll also share across on 6th and 7th April. Before that training, you need to prepare yourself because that's the most advanced technical analysis training I'm going to talk about on 6th and 7th April at Hotel Radisson in Mumbai. So before that, I will be giving 6 hours access to Elliott wave video links. You will have to go through that video links because that will then set you at par with all the other people who are already knowing Elliott wave who are coming for the session. And that will also give you a very clear understanding in those 2 days of time. And post that, I'll be sharing across for 2 weeks our entire research reports that we are publishing. You will be going through counts on the research reports that is as per NeoWave. You will be going on the counts on the software which is as per Elliott wave. Those might differ, but you will get a clear understanding on what is the preferred scenario and what is an alternate scenario. That's a very important aspect, and that is going to give you a lot of leverage over many others who are just bluntly confident on one direction without having an alternate possibilities open. It's very important that you have an alternate possibility in the markets because it's all about probability, probabilistic scenario. Over here, not to make it very complex and to keep it simple, in case you want to become an expert trader, the methods you have to use is a chart, price chart. I use a bar chart, apply indicators like RSI, ROC or MACD, which parameter to select. We have a video recording of those training which I conducted on 2nd, 3rd March of nearly 14 hours of video recording is available online on YouTube. Please get in touch with us and I'll be more than happy to share across those video links where you can start learning yourself on becoming a master trader using technical analysis. And once you do that, you will get an access to the Elliott Wave video links, which is 6 hours of Elliott Wave. And post that, you will get access to a 2 days of training program on NeoWave, Hearst time cycles, Ichimoku cloud, which are combined everything together, right from what we learned in the Master of Technical Analysis to the Master of Waves. And after that, for the handhold, you will be getting access to a free software on the cloud where you can simply just open the chart and you have the waveforms in front of you for any stock, any indices in the world, and that's going to be like a magical counts that you will come up with. However, you will still derive the trade using your own understanding. You will not rely on the software thoroughly. You will have to apply your own methods. You will have to apply the methods that I'm going to talk about. And this is how the entire flow is what I have gained over the years of experience, of more than 10 years of experience all the while. And this is how you are going to learn a lot of studies, lot of methods, and these studies and methods are going to give you a lot of confidence and conviction when you have to leverage and make a killing in the market, when you have to be on the sidelines and wait for the right opportunity. So, and if you are an intraday trader, you are trading just from morning till evening, you will get amazing trade setups that we are going to discuss, including the patterns, including how to use it on Ichimoku, and including how to get it right using the Elliott Wave software and the Elliott Wave counts by yourself. So these are the studies I think is important for someone to become an expert trader. However, this is the way I looked at it. There are people who use only RSI and can trade phenomenally well. That's a possibility. Who use only 1 or 2 indicators, done exceptionally well. Who use around 50 different indicators and do exceptionally well. So it is up to you what suits you, what suits your temperament, and you need to set the tone in that direction. You cannot copy your others' method and try to adopt it. You need to derive your own methods. You need to derive whether you are an intraday trader, you are a positional trader, how much risk appetite you have. If you start copying others and start leveraging, trust me, it's going to be a very, very sad day, because you are going to do something disastrous by looking at what someone else is doing. And probably that person is okay losing out 10,000 in a day. You might not okay losing even 2,000 in a day. So it's completely depends on how much capital you employ, how much is the risk you are okay taking. And those are money management and risk management strategies that we are going to discuss about in the upcoming training on 6th and 7th of April. So stay tuned. I'll also show you where you can, if you want to register, we have only a few seats left now for this training. You can visit wavestrategy.com. On the homepage banner, you will see training on Elliott Wave, NeoWave. You can visit there. You will be able to understand what all things we are going to cover in these 2 days of time, and what all access you will get, and everything you can register here directly using an online payment gateway on the website. Okay, so I'll not talk more now on how to become an expert trader, but I'll share across my chart on what I think is you should be looking at right now. What is Nifty doing? So that is what I keep doing. So let me share across my chart and show you what I think is happening with the markets. Okay, if you can see the screen, let me remove the indicators to make it a little simple. Okay, you are looking at a line chart here, an hourly line chart, and if you look at the data, okay, this is probably not yet updated. If you look at the data, and what has been happening is after Nifty formed a low, it continued to rise very sharply on the upside, and this is as per 22nd March, and you will be able to understand that markets have continued to rise despite of all the volatility which has been happening, and you need to ensure, you need to take care of those volatile moves. So for example, Nifty had a huge gap up opening in today's session, and despite of that gap up opening, price filled in the gap. It came down from the highs, it came down nearly 70 points, I think 70-80 points, and from there again it started rallying and came towards the day's high. So that is what is happening in the current market. Prices are giving you opportunities on the downside. However, the problem is you need to keep a very, very important stop. If you are not keeping a good stop, so for example, last time Nifty corrected from 11,573 levels towards around 11,300, and from there it again started rallying back on the upside, and so there was a move of 270 points. Now that's a sufficient enough move for someone who is understanding the importance, will also understand how the move was very good enough for any trader to capitalize on 270 points move on the downside from the levels of 11,573. But at the same time, if you are someone who is very much hung up on making 500,000 points on Nifty, I'm not sure, unless you capitalize on the short moves, you are not able to get that sixes in the market. So you need to capitalize on those short term moves. And right now, the way I'm seeing it, markets are moving near the channels. It is moving near the channel resistance. It's almost breaking above that channel resistance, and it's very important to see here, if it manages to sustain above the channel resistance, that is going to be, the rise is going to continue. And on the downside, 11,300 is now the important support that you have to keep a watch on. 11,300, if that breaks, then yes, there can be some correction we can start seeing. If that support level is intact, it's going to be buy on dips market. At the same time, you need to be cautious because we are entering into an event month, and that's why you have to be cautious. Now you need to trade and leverage less and follow the methods of trend following, using Ichimoku, using wave theory, combine them all together and trade in the higher probabilistic scenario. That's it from my side. If you have any questions and you want to register for the training, and for the first time we will share across a trial for that software which is going to auto plot the entire wave counts for you, for only for the people who are attending the training. We are giving that software for free for approximately 2 weeks. So anyone who would like to register for the training can visit wavestrategy.com or call us on 9992042202, or write to us at helpdesk@wavestrategy.com. That's it from my side, and I hope I have answered a lot of questions that I keep getting over the period, and this will help you to decide which method to follow, which methods to adopt to, but ensure you come out with your own specific set of rules, follow the rules given by the expert, and try to look at it whether it suits you or not, and then start the trading based on what is suiting your temperament. Thank you very much. See you again next week, same time. This webinar will be available on the website at 4, and have a wonderful weekend. Thank you.